Well, welcome everyone to the third installment of the State of Fraud and AML. Three trends impacting. We started with banks, and then we went to fintechs, and now we're talking about credit unions. So I appreciate everyone joining. I'll jump into what we're going to be talking about today. So just a quick intro of myself. I'm Ian McAllister. I'm the Chief Operating Officer here at Unit 21, and we'll be recording live. So appreciate everyone getting involved with the discussion. We have some esteemed speakers here today, which we'll make an introduction real quick. But just so you know, if you have questions, feel free to add them to the section, the chat, and we'll try to address them as we go. But also, we'll have some folks standing on the sidelines to try to answer some of those too. But also, if you're having technical issues, like you're hearing or seeing the webinar today, just scroll down on this page. You'll find the FAQ section that addresses that most common issues we see kind of with some of the attendees. And hopefully you'll be able to kind of self-fix those. But anyway, enjoy. We'll spend about an hour. I'll try to keep us on track. And so yeah, let's get into meeting the team. So really excited about this panel today. We're a powerhouse, a team. Just want to jump in with some introductions. So Tom, we'll start with you, but what we're going to do is have you say your name, where you work, kind of what your role is, where you're located, and just a little kind of on the side, if you could choose a Halloween costume, because we're about to have Halloween here. That represents your experience in fraud. What would it be? And I'll loop back around on mine at the end. But all right, Tom, you're first.
Hi, my name's Tom Marlowe, Senior Vice President of Operations at Desert Financial Credit Union. We're out of Phoenix. Operations includes the payment side as well as the fraud side of the world. Costume for Halloween, it's been a while since I've done costumes for Halloween. Whack-a-mole would probably be the costume, the old whack-a-mole game, because it seems like no matter how many times you do it, there's always another one. But when you get it, it's actually a lot of fun when you squish the thing. So I go with whack-a-mole.
You can also do a cheat. Get all your friends sit there and they all put their hands over all the holes, and then the tickets come flying.
And then they're not your friends anymore, right?
Exactly. All right, Haley, we'll go to you.
Hi, everyone. I'm Haley Wyndham. So I'm a certified financial crime specialist and brand ambassador for Mission Omega. My work is centered around empowering small banks and credit unions by helping their fraud teams tackle the unique challenges they face. With years of experience in the fraud space, I've had the privilege of working closely with institutions to build stronger, more resilient fraud prevention strategies. I'm also the host of Banking on Fraudology podcast, where I explore the latest developments in fraud prevention and share practical insights from industry leaders. I am remote from the beautiful Manning, South Carolina, and my Halloween costume would have to be Sherlock Holmes. I'm all about the investigative side and digging in and really using the creativity that Sherlock did, finding those little minute details that really make a big difference. So that's where I'd go.
I love it. All right, Bree, you're up.
Hi, my name is Bree Bryson. I am a director with AML Right Source, their financial crimes advisory section, and we spend our time working with financial organizations, helping them improve and enhance and tune their fraud governance and oversight. I have also spent several years over the last couple of years working and training NCUA examiners and state examiners, so it's been a fun experience. I am also remote out of Austin, Texas, so enjoying that beautiful sunshine still here. And if I could choose a Halloween costume, I'm going to actually go with Scooby-Doo, Haley. Haley loves Scooby-Doo, because I think it always is, the pick your monster at the end of it would have got away with it if it weren't for those pesky kids. And I think that's kind of what we do. We're constantly coming up with new ways to try and identify and find the real monster, which sadly is always the person. So
I love it. Mine's Where's Waldo. I was Where's Waldo with my daughter a couple years ago. And I still have the costume, so I may have to bust that one out this year. Anyway, so thanks for the quick intro, kind of dispersed across the US, which is great. Also, so as we dig into this, what what we're going to be talking about today is obviously we're going to just be exploring some data trends that we interviewed over 350 fraud and AML practitioners across fintechs, banks, and credit unions, and we're able to cut the data that way. So we have a lot of really interesting insights, and we're going to go into some different like typologies, especially around fraud, some of the growth trends, but also some of the actual like, detailed questions that we have as follow-ups. So today's webinar, we're looking at a sliver of that. You know, we have a cut of credit unions responses, which is fantastic. And just a shout out that our full set of findings will have launched recently at Money 2020. So pretty excited about the full launch of this, which has kind of all the different cuts. But today we're just going to be kind of focusing on credit unions. We'll juxtapose them against some other industries, other cuts too. But let's just jump into it. So let me give you a quick overview of what we're looking at. So who'd we survey? So we surveyed, like I mentioned, like hundreds of people in the fraud and AML space. We asked them their profession, and we split it between AML, fraud, and FRAML. Kind of a small sliver of FRAML, but mostly fraud. So I'd say like, you know, feels about 2/3 around the fraud space, which is great because I think we dig into some of the fraud trends here. And then just a nice distribution of just what they represent in their profession. So some work are the frontline analysts, some are more management level 1 type of roles, and then a good smattering of executives. So feels like again, it's a good kind of representation of who's engaged in the world of fraud. And so let's jump into it a little bit more. So first of all, we're going to talk about account takeovers. And so we're gonna talk about a few different trends, account takeovers. We'll talk about scams, real-time monitoring. But let's jump into the account takeovers first. Sorry, I'm bouncing around. All right. So first of all, what you're looking at is a cut of effectively like what of the respondents between for the credit unions, what was their most costly type of fraud, and what was the most time consuming. So we had this cut again for the other industries that we looked at, but the account takeovers definitely floated to the top for sure for the most costly and the most time consuming. And so it's an interesting thing, but also, and we're gonna actually talk about scams in a second, which is actually on the tail right. It's a different trend happening with scams, but ATO just definitely feels like it's the biggest kind of the biggest risk that people are seeing today. So first of all, I'll start with Tom. So does this gel with kind of your observations, either directly within like your experience or within your like network of credit union peers? Like how is ATO, account takeover, like kind of impacting you guys today?
I think it's roughly in line. I think every credit union is going to be a little different depending on what their membership base is. But account takeover is definitely one of the things that we're seeing a lot of, continue to see a lot of, and it is, as it says there, it's not only costly, it is also time consuming. So yeah, this roughly gels. I think we see a lot more check fraud. So our graph for check fraud might be a little higher, but that could just be what we're seeing here.
Oh, interesting. And Haley, I'll jump to you. Same question, and Bree, you'll have the same. But maybe Haley, what are you seeing and feeling? Is this representative, kind of like how you're seeing in your client base?
Yeah, absolutely. Account takeovers is always going to be a huge problem, especially now with the growing technologies and how we can effectively combat those if you even have the appropriate resources to combat those. So that also goes in part with the why is it so time consuming to investigate these types of cases. I do agree that by case, per case, it's time consuming for account takeover and elder. But overall, I think there's generally way more types of account takeover that happen in a credit union. And also just the costliness, I just see that that's the largest trend right now with the credit unions I've been talking with.
Why is elder abuse more time consuming from your perspective?
From my perspective, it's especially in credit unions, it's more time consuming because they are going to have that member first approach where they're going to have those conversations with the members. And it's not only that, but they're also reaching out, if there's a trusted contact that's been set up on the account, or if they're reaching out to law enforcement to do a well visit. So those are things that where we may look at it today and the investigation starts today, the investigation doesn't end today. So we can't button it up, day one. It's going to be something that we're going to have to look at along until, we're able to solidify, is this fraud happening? Is this person being taken advantage of? And what can we do to protect their assets going forward?
And Bree, do you think it's like more time consuming because because the systems aren't there? Like, it feels like account takeover is like, okay, it's account takeover, flag it as account takeover, there was loss, but like, it feels like there's a lot more investigation going on with identity theft, with elder abuse. Is that the right way to think about it?
I absolutely think so. And to Haley's point, all of those new technologies and even the increased anonymity with the way that we can pay for things using our phones, using this, in order to be hacked, it's so much easier now. The data and information is consistently out there. It's consistently available for people to access and get in there. With the elder financial abuse, the same sort of thing is happening. When we're investigating those, we're looking at possibly someone who doesn't want to be completely forthcoming because either they're embarrassed, they're ashamed, or they know it's a trusted family member and they don't want to say anything that's going to get them in trouble. And so those investigations often take longer because it's a lot of hand-holding, coaxing information out of the individual that is unfortunately being taken advantage of. And to Tom's point, I am seeing a lot of check fraud out there, even more than I'm seeing account takeover. So I found these results very interesting. I've seen a significant increase in check fraud in almost every single one of our clients.
I did a check fraud webinar. Check it out on our website. How about that?
Nice plug.
Yeah. All right. Let's jump into the next one. So this is a little different. So it's kind of taking the same cuts, but then looking at credit unions versus banks. And so I know this is supposed to be a credit union, but it's still interesting. I feel like it's an interesting way to think about just the industry. I mean, there's so many credit unions, banks in the U.S. But like you said, the member first is something that's like critical to the ethos of the credit union space. So let's dig into it a little bit. So they both have really high ATO. I mean, I feel like ATO, account takeover, is the predominant trend for both. And same with check fraud, actually. You see kind of that those are the high spikes. But Haley, is like, I'll go to you first. Is like ATO just a perpetual risk since we've like kind of moved into this digital world, or is it something that's just like, is it cost of doing business? Like it just feels like ATO, as we have more mobile focus, higher adoption in like digital world, that ATO is just going to be on the left forever. What's your thoughts?
Yeah, I agree that, the perpetual risk in that fraud prevention, it refers to the ongoing, the evolving nature of threats in the credit unions and the other financial institutions that they face. And, credit unions, we are going to have to continuously update our fraud detection methods. The more we grow, our products and our fraud prevention tactics should grow with us. We can't use the same method that worked last year if we're implementing new products and services, or we're implementing real time, for an example. We've got to make sure that our detection and prevention methods are going to continuously update along with us. Ignoring it or being reactive instead of proactive can lead to greater exposure and higher long-term costs, making ongoing vigilance and accountability truly essential.
I like it. Tom, why is elder abuse higher for credit unions?
Well, I think we talked about it just a little bit earlier. I think it's in part because there's so much variability in how it happens. Account takeover is kind of all day, every day, and there's a lot of similarities. You kind of get good at doing it when you do it that much. I think elder abuse, because each case is different, because of the fact that you, in a lot of cases, you're dealing with them face to face, there is a desire to really help in any way that we can. And as was said earlier, sometimes getting the information and really identifying what's going on is complicated and time consuming. So I think there's also just a general desire to be as helpful as you possibly can for someone that's in a very difficult spot. And I think there's just a lot of care and a lot of effort and a lot of personal personal satisfaction that people get from being able to help someone in this situation.
By the way, you could have done a plug and be like, credit unions, we just care more. Like,
I've been with credit unions for a quarter century, so I guess it's rubbed off a little bit. But really, this is true. When these stories come up, the level of passion, the level of just desire to be as helpful as we possibly can, it's just greater than it is on the stuff that happens all day, every day. It just is.
Yeah. It's a horrible thing, regardless. And of course, everyone cares. I'm not saying that. But Bree, let's jump over to. I'm going to look at scams for a second. Like, why are scams lower for credit unions versus banks? Like, what? Like, are they taxed more at banks versus?
I think that's part of it. I think it's probably twofold. To Haley's point, the member first mentality. There's a lot more contact with the member base in a lot of the credit unions, and so they're having more educational conversations and monitoring those people and knowing their clients maybe a little bit better and their members a little bit better than in the, to Tom's point, the law of numbers, the larger banks, that these guys are going to start attacking just, as many as they can, throwing spaghetti at the wall, seeing what sticks. And I think in the banks, because of the population and the larger grouping, there's just a higher likelihood that those are going to be successful versus the smaller credit union that may be able to identify a member's activity that doesn't look quite right off the bat. If each institution is working, hundreds of fraud alerts every single day, that volume is going to impact their ability to effectively monitor and work through them and identify fraud.
Yeah. The other one was identity theft, which is interesting. I think we talked about it a little bit earlier, but it just feels like the cost, and I know I'm zeroing in on cost, but the cost for credit union just feels like outsized. It looks like it's like 5x, of respondents saying it's like very costly versus banks. I guess, Haley, do you have any thoughts on like, do banks just have better tools to think about identity theft? Is that actually a thing, or is it more just like it really is the cost is people hours to deal with identity theft for credit unions?
Yeah, I'm looking at the chart and I can see that they are, similar in the cost range, but it is that time consuming aspect that's very different for credit unions versus the banks. And I think it's because it's the lack of understanding and being able to truly identify what is identity theft versus first party frauds, first party synthetic, and even synthetic identity. At what point is it truly that it's someone calling in and this is identity theft? Because we also have that process of trying to make sure that if there is recovery efforts, we're trying to get any funds back, or if it had to deal with a car, so to speak, we're trying to get that asset back so that we can recover any type of loss. So I know that there is some issues as far as how do we approach these in credit unions, because we do have that, again, it's that member mentality, but it's that member focus where we trust our people, right? We've built up this trusted relationship where we don't believe that they're going to take advantage of us. And, in reality, we do need to, I hate to say it like this, but we need to wake up to know that fraudsters are out there and that they are going to try to exploit the goodness that is in credit unions.
Yeah, well, let's jump into kind of where it looks like they're trying to exploit, at least where the growth is. So it's scams. Welcome to the game of scams. So this is a cut, effectively, of asking the respondents, how much has scams increased year over year? And so has it increased a little bit, like less than 10%, or a lot of it, which is greater than 75%, and then some in the middle? And what you can see is that credit unions had scams increase more than 50%, and banks had scams increase less than 50%. It's just like, effectively, it looks like a shift. It looks like a shift where scams are, maybe they had started with banks, and maybe the denominator's higher, so it's just going down, and now they're starting to exploit maybe some of the other aspects of what you all were just talking about with credit unions. So I guess, Haley, any other thoughts on why you think scams are growing faster within credit unions? Like, is there an actual acute exposure there?
I think it's due to several factors. that perception of vulnerability that fraudsters view the smaller credit unions as easier targets with less sophisticated fraud detection systems. You've got the growth of digital services. The expansion of online and mobile banking has increased the attack surface. And some credit unions just really will struggle to keep up with the fraud trends. First party fraud, again, we talked about the trust that credit unions build with their members that can be exploited, making them vulnerable to chargeback abuse and any other like internal fraud. The vulnerable populations, of course, the older members and those in rural and low income areas. Social engineering tactics like the phishing, vishing, smishing are becoming more sophisticated, and members are more frequently tricked into revealing that sensitive information. And again, I mentioned it a minute ago, but that synthetic identity fraud. The fraud rings see credit unions as easier entry points for synthetic identity schemes, and it's leading to loan and account fraud.
Tom, is this like a risk to like the branding of credit unions, as being like the ones that, they are there for their members, but like if scams are increasing, it's like, what are you doing? What are you doing about it, Tom? I guess is my question.
So I think it absolutely is potentially a risk. Our members, just like anyone who's working with any organization, they're entrusting the organization with a part of their life. In our case, it's their financial part. So if we're unable to, in reality, protect them, but also the perception of protection, it's absolutely going to negatively impact. Because it's expected that any sort of financial institution, credit union, bank, or any financial institution is going to be able to secure the money and protect them. So I think it absolutely is. I think one of the other things that we're seeing is that the tools that the fraudsters are using, they're becoming more automated, they're becoming less expensive. So the ability to attack not just the larger banks or the larger credit unions, but they can widen the targets that they have and do that at a good cost point. So I think that trend is going to continue, and even mid-sized and smaller credit unions are going to become more targeted because it's just easier to do.
Yeah, and just kind of quick follow-up for you. Like, do you think what's more effective, like customer education or like monitoring on their behalf, looking for like outsized transactions or like anomalies in their
it's not an either or, it has to be a both. The monitoring of transactions or anomalies all of those systems have to be in place. They have to be in place. They also have to be talking to each other, because activity that may be in and of itself innocuous on one channel but combined with activity on another, and all of a sudden now you've got something that looks suspicious. So those systems have to be there. But we also know member education is a necessary part too. The fraudsters are coaching members on what to tell us when they come into a branch. So they'll coach them and say, I need this money and it's for home improvement, something that sounds very reasonable. They've been coached on that, making sure that our folks are on the lookout for that, but also member education. If you've been told, here's how you want to do this, or coached on what to tell us, those are red flags in and of themselves. So it has to be an and, not an or.
Yeah, I think that's good. And Bree, you said you work with some of the regulators like NCUA and such. Mm-hmm. Are you teaching them this, or do they know the shift is happening? Like,
I definitely believe that they are fully aware that the shift is happening. Yeah. I think that they are looking more to their organizations to be identifying the types of scams that are coming through and to really understand their risk and potential exposure. They are also working with their credit unions to educate them on this is happening. It's no longer the, oh, well, we know our members, this is never going to happen here mentality. It does happen, and it is happening there. And so I think the examiners are really working towards educating the credit unions on, yes, it is happening, even in your small area, in your small field of membership, whatever it is, this could be happening. And what steps are they taking in order to ensure that they're identifying potential fraud, that they're educating their members, that they have the infrastructure and support in place to actually adequately monitor for this type of thing?
Well, I think we'll jump in a little bit more to just the types of scams that are happening. So we had mentioned, 39% report between 25 and 75 rise in scams in the last 12 months. So it's kind of like a recap of the prior, but definitely like very rapidly growing. It's the second most common fraud type across credit unions. So even though it was on the right of the prior graph, it's definitely growing from a percentage standpoint. But these are the common types of scams, right? It's like, it's at the top, it's romance scams, it's phishing, all the way down to, you know, the pig butchering. So Tom, does this, like, when you're looking in, again, across your peer group or maybe within your own institution, does this gel with your observations?
It largely does. Romance scams, I was surprised to see that up at number one. It certainly happens, and those tend to be very devastating, but I don't know that that's certainly not for us the most common type of scam that we're seeing. It's much more on the phishing side. And I think the other thing that I don't know that there's a common way that everyone is identifying different types of fraud, because pig butchering and romance fraud, I mean, they can be that Venn diagram, there'll be some overlap between those circles. So we're definitely seeing it rising, but I think phishing and money mule, the number of money mule attempts, that's definitely growing considerably for us.
Yeah, Bree, I guess, Bree, anything from your standpoint, are these anything that's not jiving with kind of what you're seeing in the industry?
No, it's all in line with what we're seeing out there. And to Tom's point, it definitely is a Venn diagram, and clear definitions on how these things should be categorized probably would help us all tackle this in a much more direct manner.
Yeah. All right. Well, let's get to the next. So kind of a spicy slide a little bit. So there's some like similarities on how banks and credit unions reimburse. So this is all about like, hey, when somebody scam, who gets reimbursed? And so the question was effectively, do you reimburse your member base or your customer base, depending if you're a credit union or a bank? And we cut it by the size. And so this, so effectively, like the smaller, I would say, quote unquote, smaller banks and smaller credit unions, depending on those assets, have similar kind of reimbursement approaches. But as you get a little bit larger, actually surprisingly to me was that banks responded, if they're a little bit larger, that they do reimburse more often than credit unions that would say like a similar size. So I guess I'll start with Tom. So like, what are your thoughts on like, why do you think people responded? I'm not saying it's totally accurate, but why did people respond that larger credit unions don't reimburse as much? Is this like an anomaly in the data, do you think, or is there something where larger credit unions have better scam detection, so they know what they should or shouldn't reimburse? I don't know.
So when I saw the number there, that is surprising, because the rules, the regulations are similar, the same, regardless of what size assets you are. So that number is surprising, and it seems actually a little low, or actually quite a bit low. I think the fraud detection tools and the ability to detect what's going on. Larger credit unions are generally going to have more folks, as well as more sophisticated tools to identify that. But once you've identified that the member is a victim in that scam, you pretty much have to take that action and reimburse them in a large number of cases. So that number actually surprises me.
Yeah, it surprised me too. I thought it was going to be flipped. I thought I tried to get the prior speaker to talk about like larger banks not reimbursing as much, but they wouldn't take that bait. But I was trying to do that. So I guess, Haley, question for you. So like, what's when you talk to people, first of all, do you talk to people about their reimbursement kind of strategy, and like what's the structure that they think about? To Tom's point a little bit, there is some legal aspect of what you have to reimburse and not, but there's a lot of gray area too. So I don't know if you have those types of discussions and like what's some insights there.
Yeah, absolutely. You know, credit unions, they face that tough balance of when deciding which scams to reimburse. You know, they're weighing the legal obligations, member trust, and the financial impact. I think reimbursement is more likely for those unauthorized transactions, such as account takeovers, but it's less so for scams involving authorized transactions like wire or peer-to-peer payments, where the member was tricked but initiated the transfer. They must also consider resource constraints, member retention, and avoiding setting precedents that encourage fraud. whenever we're like, okay, we're going to pay every scam, well, then everybody's going to have a scam and you're going to go belly up really quick. But I think ultimately it's a case-by-case evaluation that balances protecting the institution and maintaining that member trust.
That's interesting. And Bree, from your standpoint, what's the regulatory stance here? Like, do they know that there's a difference here? Do they think about this? Like, do they cut the data this at all, or is there expectation that everyone's the same?
I don't think that they're really worrying about that side of it unless it actually is impacting the financial stability of the organization. This is more of a member retention, member pleasing act by credit unions if it's a true scam where they've authorized it versus they lost it due to something else. So I think that it just needs to be adequately documented and shown this is the process we are going to follow for this.
Well, it's interesting. We'll get into real time in a second. And we can talk about that too, and just like the technologies that are driving some scams. But all right, well, I will get to the next topic, which is check fraud. So we talked about it a little bit, but we'll start with 42% report, again, kind of a mid-size rise, so between 25 and 50% in check fraud in the last 12 months. And so it's not as like dramatic of an increase versus what we just saw in scams, but it's definitely not going away, right? It's like, there's definitely still kind of looks like a middle finger, to be honest with you, the check fraud growth rate. But Bree, what are credit unions doing to stem the trend? Like, what are they like? How are they thinking about this? If it's just not going away, is it just like a cost of doing business?
Well, and to some extent, it is a cost of doing business as for any financial institution, but we've seen a lot more emphasis placed on the real-time monitoring systems and the agents or scenarios that they're running for check fraud, lowering thresholds, lowering dollar amounts, pouring some additional resources and energy, to show that this is an increased area of risk in the organization. And so we are going to divert additional resources towards this higher risk. For those institutions that perhaps don't have a sophisticated monitoring or identification system and they're running more of a manual process, I think a lot of it is coming back to old school training. These are the 5 points of negotiability on a check. This is how you review a signature. Turn it upside down and compare it to others. Does it look like all those things that we were taught as tellers on the front line now is coming back to help the younger generations start looking and analyzing checks and how to identify this type of fraud.
I feel like I should be telling my marketing team that when we send this out, like afterwards, we should have a QR code to go to our website around our check fraud real-time monitoring module. Post that commentary, Bree. I just found that. This is not supposed to be a commercial. All right. So how about Tom? Like, how, from your perspective, is check fraud? You had mentioned it earlier. You thought check fraud was probably would have popped to the top. What are you doing differently? Is it just like the same old, or are you actually trying to invest in new tools?
So not only new tool, it's really what Bree outlined. So some of it is new tools and also adjusting some of the settings on those tools, but also adding additional staff, and also just some of it is, again, go old school. Here's what you need to look for. And that goes to the centralized processing, because some of that's remote, and some of that's coming in via the phones, but also some of that's coming in the branches. So it's also training people that may have not written too many checks in their lives, how to identify is this check legitimate or not. So it really runs the gamut, but because it doesn't take a lot of checks can be written for a large dollar amount, and you can have one or two that can have a material impact. So it systems, people, process, all of it.
And Haley, is check fraud like the most profitable typology for a fraudster? It just feels like it's quote unquote low risk from their side because it just continues, right? But like, how do you think about or do you think about what are the economics driving these different trends and check fraud continues to stay high? I don't know if you have that type of conversation with your client base.
Yeah, absolutely. It's funny you talk about, the risk versus the reward. What risk is there really for the fraudsters at this point? If you get caught, it's a slap on the wrist, maybe 6 months probation for your first offense. But, for a larger scale, like, the wire and the cryptocurrency that we see in pig butchering, you're going to get a large win quickly versus the check fraud. With the counterfeit, forged, or stolen checks, fraudsters can, change those amounts from anywhere from $1,000 to $10,000 per check, depending on how much they think they can get away with. And then, repeated successes, which can mean lack of controls at the financial institution or lack of controls at the businesses. If it was a business check, can lead to significant financial gains over time. You also have those overpayment scams where, the fraudsters will send a check to the victim, convince them to deposit that check, and then send back any of the overpayment. Typically we can see those scams can net anywhere from 500 to 5,000, but larger amounts just depending on the size of the counterfeit check and how convincing that scam really is.
It really is interesting. I mean, this theme has come up on a couple of these webinars that I've done, which is like the economics of the business of check fraud. Like it's a real business, like an annuity almost, because it's lower risk and there's so many checks out there that you can get your access to versus, like you said, the high risk, high reward type of other risk trends and scams and wire fraud. Well, want to dig in just quickly into the types of check fraud that's happening. So we asked a follow-up question, what type of check fraud is most prevalent? And maybe a little bit of an anomaly in the data that we're not seeing so much represented in the forged and check kiting for credit unions, but we'll take it for what it is. But we are seeing kind of the higher bars in mobile check deposit, or RDC, remote check deposit, and identity check thefts. Treasury check. So those two are obviously a little bit outsized. So I guess, Haley, I'll go back to you. Thoughts on why?
So credit unions promote RDC for convenience, but again, that can lead to more fraud attempts as it's easier for fraudsters to exploit the delay in detection compared to those in-person deposits. The trust in treasury checks, fraudsters target those treasury checks, which can be seen as legitimate, especially during the crisis periods. Government checks flood the system, which can allow counterfeit checks to slip in. But if they're also committing tax fraud, then you go to the Treasury Check website and it says this is a legitimate check for this amount. So it's very hard to detect those on the front line. And it's really where you should be able to trust in your back office process to be able to continue that investigation and reach out to whichever entity to help prove the validity of the check. The member convenience, credit unions focus on member service, sometimes prioritizing that convenience over stricter fraud measures, which make them more vulnerable. Resource limitations, of course, we talked about that multiple times. The smaller credit unions lack the advanced fraud detection, making them more exposed to multiple deposit attempts or fraudulent checks. And just organized fraud. I mean, fraud rings exploit gaps in credit unions' slower response times and target multiple institutions with counterfeit treasury checks and these counterfeit checks as well. So credit unions need that stronger real-time detection tools, better member education. It's just like Tom said, it's not a or, it's an and just improved collaboration to address these risks.
Tom, is that how you're investing, protecting against this? Is it the front line? I continue to, or what, instead of you trying to talk about your own institution, what do you see as best practices to try to protect against?
Defense in depth is really what it comes down to. So you're counting on the people that are accepting the checks, you're counting on the people that are reviewing the checks, and you're counting on making sure that that there's a great level of communication and coordination between the front office folks and the professional services or back office groups as well. You can't have the silos that defined those teams years ago. That just no longer works. It's too much of an opportunity for the bad guys to exploit. So a lot of education. The tools have to be there, and make sure that we're actually looking at legitimate items. But yeah, coordination and the tools.
Well, one more on this, but this was on check fraud. This is a little bit of a different cut. So it's the same types of check fraud, but just again, we split larger versus smaller credit unions effectively. So Bree, is there a real distinction between smaller and larger credit unions, or it feels like it is based on the data, but why?
I think to some extent it's just a law of numbers.
Mm-hmm.
Larger credit unions are going to have a larger field of membership. They're going to have a larger member base. They are more likely to see a higher volume of check fraud. However, based on the types of fraud that were identified, the check altering, mobile check deposit, that would lead us to believe that even the smaller, more rural credit unions are going to see a lot of that as well, just because it's something that maybe they're not going into the actual physical brick and mortar organization. They're doing things remotely, or it's, we found this check in the post office and we have mail theft there, or at the mailbox that was on the edge of my rural drive. Now it's being washed and presented for fraud. So I think in most cities, we're now seeing lock boxes for mailboxes, and, it's not in front of the particular home, it's around the corner or wherever it's at, versus the old fashioned row of mailboxes at the end of the dirt road. So some of that depends on where it's at.
Yeah, that's true. Haley, any response to this, large versus small?
Yeah, I agree with Bree. I mean, it all depends on where the location of where they are and the resources that they have available to them, whether or not it's, more impact on the front line. If someone's able to truly go in and I'll never forget, talking with tellers, they're like, I need to touch it. So if they can't physically touch it and it's being deposited through RDC, that's where there's a big knowledge struggle, and understanding truly what is fraud and what isn't without impacting that member, or that valid member transaction.
That's great. All right. Well, last topic is around real-time monitoring. We touched on it a little bit in a couple of different ways in the prior slides, but let's dig into what we're looking at. So one of the questions was, what's the urgency of implementing real-time monitoring? And we asked, yes, you have it. You're doing it, last year, this year, or really no plans, or you have plans in the future, or no plans at all. So it was really interesting, and I've heard this in the industry actually a little bit in talking to some organizations that, some of the QSOs and some of the other organizations that work with multiple credit unions, that there's less focus on real-time monitoring, at least. So, and this graph kind of supports that. I'll tell you what our hypothesis was, but really this is only 25% of those respondents saying that they've really planned for real-time monitoring, and so almost 2/3 not yet. So Haley, is this like naive? I mean, we're talking about FedNow, we're talking about RTP, we're talking about Zelle. I was part of the group that helped launch Zelle at early warning. Like that was like real-time monitoring was core to doing anything in a real-time payments infrastructure. But is this naive, or are they just not feeling the pain yet?
Well, let me tell you, when I saw this slide, my jaw literally hit the ground. I'm sorry, who's not investing and have no plans? Well, are you kidding? Like, fraud's not going anywhere. It's getting better and better and better, more sophisticated. We've got to do our part. So yeah, I think a lot of it is the naiveness of not feeling the pain yet. Many credit unions just haven't truly experienced a major fraud incident, which would cause them to have that false sense of security. They're like, this will never happen to me. Bree said that earlier. Not here, not in our small credit union, that will never happen. But I can tell you there are several mergers that are happening because of fraud, because they just cannot keep up with it. Fraud is evolving quickly, and without real-time monitoring, they are vulnerable to those faster, more sophisticated attacks. You've got the emerging threats, of course, with the rise of instant payments and mobile banking, which I talked about earlier. Reactive versus proactive. I am tired of the reactive phase of fraud fighting. We've got to be proactive. We can't wait until a fraud crisis occurs, because it's more costlier that way. We say we want to invest X amount of dollars in this one fraud prevention, and it's like, well, we haven't really taken a big loss, so there's not really that ROI. And it's like, okay, well, in 6 months when this happens and I have to give you the I told you so memo, don't come for me because we've got to do this. So, it can also severely damage that member trust and the credit union's reputation if they do have to respond in that reactive way. So, credit unions that fail to invest in real-time monitoring may not feel the pain right now, but they are leaving themselves extremely exposed to significant fraud risk in the future.
Yeah, I think a little bit of a side note on the prior webinar, we talked a little bit about the response time to certain things and like what fraudsters or people were willing to accept from like how quickly they respond to certain fraud trends. I remember when we launched Zelle, one of the panelists prior helped build the infrastructure around fraud, and she was cool as a cucumber, and she we saw some tick up, but we were able to react very quickly. I think the banks probably would have fired us if we did anything differently. But yeah, this one surprised me too. But Tom, like, and again, don't need to respond about your specific institution, but like what's the decision rubric around not dealing with, like, not looking at real-time monitoring as a fraud protection?
When I saw this slide, my first thought was, I'm very glad I'm not at one of the 26%. This is when you start talking about the cost associated with it in people, in time, in member impact, and all of that, it's very real. But if you don't have real-time monitoring, the ability to have the fraudsters, they are very aware in real time that they were able to get the money or not. And if they're not leaving. They're continuing until you shut them down. And if it takes you days or longer to figure out that all of this activity is fraud, by the time you realize that, you're in a world of hurt. So I think that anecdote hopefully convinces folks that they need this in place. If not, talk to some other credit unions, talk to some other folks that have experienced this, and maybe you can learn through their unfortunate experiences. It really comes down to you need this. So for us, tools that we've put in place, we definitely are looking at the ROI. We're definitely looking at what is this going to return. Monitoring is usually able to justify the cost associated with it. You can see or make some reasonable assumptions about what those tools are able to do, what those additional people are able to do. But yeah, for any credit unions that think this isn't going to happen here, that's a dangerous approach.
Yeah. Mm-hmm. And not to do a shameless plug, but but it is actually what I'm seeing in the market is it really is predicated on how fast you can get the data and what type of data you get. So if you just get like a transaction data, it's tougher to make a decision in real time if you don't know other things around, like the identity or the device or other things that you can plug into your decision. And that's a big hurdle. I think for a lot of smaller institutions too, where they're like so dependent on organizations to provide that data versus spinning up, a query on data that can feed into a real-time monitoring system. So I know we're focusing a lot of our time on that to make sure that we can enable that real-time decision faster. But Bree, from your standpoint, and I'll ask you this question, but I'll jump to the next slide just for time. But are regulators more or less focused on capabilities around real time?
I think they're more focused, and I think they're going to become even more so. The notice of proposed rulemaking that came out from FinCEN in June of 2024 around revising the BSA guidelines to incorporate the national priorities that came out with AMLA 2020 specifically addresses fraud. And as part of that, one of AMLA 2020's purposes was to encourage technological innovation, the adoption of new technology. And so I think that examiners and regulators are going to be looking for that. They're going to be looking that you are at least exploring the opportunities and what can you do about it, and how are you making the most of systems that you may already have in place that aren't being fully utilized. And then beyond that, that's where I think we might finally start seeing some true regulation around fraud come into play, because they're going to have to start incorporating that national priority for fraud and including that risk assessment process. It says the proposed rule indicates that basically they're going to have a better risk assessment process to identify and understand not only the money laundering and terrorist financing risk, but also illicit financial activities. That's fraud. which means for the first time, we're going to start seeing more requirements for a real fraud risk assessment. And these organizations need to understand where their risk lies. And then what is their risk appetite? Because obviously they can't review everything, but what are they willing to invest in? Where is their biggest risk? And how are they going to apply that risk-based approach to it?
Yeah. Well, it definitely feels like it's not going away. So one other cut. This is kind of our last slide before we kind of wrap up with a couple of closing comments. Is we took a look at asking the question of like, what's your false positive rate, effectively when using real-time monitoring or not. So black bar, the darker bar is they are using real-time monitoring. The red bar, orangey red bar is they're not using real-time monitoring. Effectively, it's skewed towards the right, which is like the higher the number, the worse for organizations that are not using real-time monitoring. But I guess, Tom, I'll start with you and just say, like, why are false positive rates lower if you're using real-time monitoring? Like, I understand like how you get in front of a payment or a transaction using real-time monitoring, but like, are the people using real-time monitoring more sophisticated? Are the tools more sophisticated to get the false positives down? Like, what's your kind of reaction to that?
I think, especially for credit unions, based on that previous slide, the ones that are using real-time monitoring are probably the ones that have a more sophisticated fraud group. They probably have more tools in place. Those tools are also, in some cases, talking to each other or connected. So I think they're able to make better decisions quicker. Again, sophistication of tools, sophistication of people.
Yeah. And Haley, how are you seeing people lean into real time and their people, like not just real time from a tool standpoint, but like their approach towards real time rails, like Zelle, like RTP, like FedNow? Is it like if they get one, they have to get the other, the tool to protect themselves? I can't let this go without saying like real time payments equals real time fraud. I think that's been said for about 8 years now. But like, what's your advice as organizations are kind of leaning into these newer rails?
Yeah, I think, what I'm seeing is that we will implement something with real-time capabilities, and then we will set the detection systems or prevention systems that we have, and we'll use the out-of-box parameters. One thing there is that you've got to make sure that you're dedicating the time to review that information, because you will have some that are false positives, but it's, again, you have to work with the system. So a lot of this is machine learning, but you have to tell the machine what it needs to learn. And so making sure that you have the dedicated staff to that. Don't just put it in a box and then fix it and forget about it, sort of thing. You need to continuously look at it, look at the rates that are being approved, the things that are being denied, making sure that any complaints that were received from your members are being answered, and making sure that you're providing that feedback back to your tools, so that it can start operating properly, and you will then have even less false positives that show up. Because what we eventually want to get to is where we can kind of go hands off and let the machine do what it's capable of, but you can't do that in the offset. You've got to work with it and let it be a part of your team and not something to replace your team.
Yeah, interesting. And Bree, maybe last question before we wrap up. Like, again, I know a lot of my bend has been around how you think about how you think regulators are thinking about this, but the higher, like, these are pretty high false positive rates over on the right? Like, how do regulators respond to seeing reports where you have like really high false positive rates? Or do they just say it's your risk? You can do what you want?
Well, and again, this comes down to, if the false positive rate is too high and that you are just looking at way too much noise, you're going to end up missing something. Because with fraud, we have a very small window for return, and we need to start moving on these things as quickly as possible. So if you don't have enough staffing, I'm a big proponent of adequate staffing and even tailoring the staff to your risk assessment, then you're going to end up trying to clear these things too quickly. You're going to miss something. So examiners are definitely monitoring and watching for that. But to Haley's point that you need the staff available to work it, that's true, but you also need the right staff. You need people that actually understand what it is that they should be looking for, and maybe not just throwing it out to anybody that's within the organization that can look at these alerts because you have too many. So it is a constant tailoring exercise. And really, with fraud, it should be looked at more frequently. Fraud trends change. That's the whole point of this webinar, is that we're looking at this because the trends may change based on the area that you're in. The trends that are going on in the West Coast of the US may be very different from what's going on in the Midwest versus the East Coast. Do you have locations all the way across the US, or are you focused somewhere? So you can't just go online and say, okay, check fraud is on the rise, but maybe it's not for your organization. You really need to be aware of the risk that's going on in your own organization, and your examiners are going to be looking for that and expecting it.
Yeah, it's really interesting. Like being able, again, it goes back to a little bit of the data, like what type of data do you have in there to help you cut your risk and your controls in a way that like maximize your true false positive ratios, that kind of stuff. So it's a fair point. And yeah, we definitely see the location as a large driver into like certain trends. I think that definitely was relevant in the check webinar that we did. We're talking about like the cities, the inner city organizations, the crime rings, that kind of stuff, which we're focused on the coast mostly. But listen, I really do appreciate the three of you leaning in on a lot of the data. So I'm just going to wrap up, and then I will I'm just going to wrap up a little bit about Unit 21. And so Unit 21 is the company I work for, and we are a fraud and AML company. We work with banks, credit unions, fintechs, crypto companies, embedded finance organizations. We work with hundreds of them. And really the platform, just to give you a sense, is we have transaction monitoring, which is, we have three things. We have transaction monitoring, and that's doing the monitoring in real time, but also async, which runs as quickly as every 10 minutes. So could feel real time to a lot of organizations that are used to day after. But we really focus on kind of the 360 view of the customer. So like you said, geolocation, device ID, transactional ID, historical deviations from their trends, really making sure that you're looking at the full holistic view. We have a no-code approach. So we really try to give the tools to the fraud managers and the AML, the BSA officers to build, test, and deploy their rules themselves without a bunch of engineers. And then, we have a whole organization to help you work to tune those alerts. We have a case management organization infrastructure, which is very customizable itself. You can configure it based on your own operational setup. We also have AI agents embedded in there, where we're already seeing people use the AI agents to help them with case reviews, check fraud reviews, and actually doing a lot of the SARS, not the filing itself, because you always want somebody in there, but somebody who's helping you kind of create the narrative. And we're already seeing a lot of efficiency with our teams, which is great. And then we have a consortium. I worked at Early Warning. I came from a fraud consortium, and we have our own. So we have close to 60 participants, I think close to 50 million identities in there, where we're already feeding back into the network to allow, if somebody flags somebody as a fraudster, and they're at another entity that's on our platform, they get an alert. So really excited about where we're going, and where we're going next is just want to say thank you. First of all, a big thank you to CU Insights for helping us co-host this. But most thank you to Haley, Bree, and Tom. You guys were fantastic. Appreciate you guys leaning in. I tried to ask some things to put you on edge a little bit, but you guys took it pretty well. So appreciate all of you, and for everyone out there, enjoy Halloween, and we'll see you soon.